Roy, it's a pleasure to have you here. You've been very successful in the financial industry. You worked at Julius Baer, you climbed the ranks, you were senior manager there. But at the same time, you care about personal finance. Not necessarily something that senior managers in the financial industry care about, right? Why is it? Why personal finance? Why do you care about the financial well-being of people?
Yeah. Thanks, Sunny, for having me. It's a pleasure. I think for me personally, it was important with the changes in the financial industry that we start looking more at the 99%, helping them, because those are the ones that really need the help rather than the 1%. And we saw those changes over the past, I would say, 5 to 7 years. And that's when I started really with my partners to think about, okay, what can we contribute to help people improve their financial health through a digital platform. So for us, this is key. We want to empower people to live better, and mostly those who really need it.
So one way to empower these people is through Robo-Advisor, right? Make these great investments product accessible for the masses. But last year or over the past few years, robos were almost counted out. UBS, we know the case, the UBS case. They closed down their robo, and but now it seems like they are going through a renaissance, through a case of or phase of re-emergence, right? You have Tavor with their full robo solution. We have Descartes that just partnered with a huge bank. Do you think that there's a renaissance of robos, and do you think they stand a chance against human advisors?
Yeah. So I think, first of all, investing is so important for anybody who wants to improve their financial health. So understanding that it's not about only the savings part, but also the investing part. And for the vast majority of people, having access to investment solutions through a human advisor will not be possible in the future. And that's why the robos started to appear, and they will stay with us. Now, to your question, I think it's important to understand that you need to look at it with the view of different markets, okay? In the US, for example, there is no renaissance. They are here, they are strong, and every major financial institution today offers a robo-advisor. When you look at Europe, it's a little bit different. The adoption has been much slower because people are a little hesitant to really entrust their finances maybe to somebody who is new in the market. And what you need to also understand, I think, is that the cost of customer acquisition is extremely high. And that's one of the reasons, from our understanding, why UBS left the UK and their robo-advisor offering. However, just last week, if you look at the UK market, Goldman went in and took a stake in Nutmeg, which was very interesting. So I think, to answer your question, I think it's a very, very important segment. And in the future, don't look at the robo-advisor just covering people with small investment amounts like $500 or $1,000 or $5,000. You have to look at the robo providing services also for high net worth individual. And I want to make a point here. If you look at the robo-advisor that was introduced to the US by UBS, Advice Advantage, their minimum deposit is $250,000. So just keep this in mind. This is not a solution for mass affluent, mass retail. This is really a solution for high net worth individual with a minimum of $250,000.
So Nummo just did an excellent study on robo-advisors. They covered all of the relevant robo-advisors in the US, and you categorized them, and you looked at the good ones. You did a ranking in terms of best taxable robo, best retirement robo, and so on. But obviously, cost is a big driver or a big selection criteria. Besides cost, what does a good robo have to have?
Sure. So maybe before I answer that, I'll give you a little bit of background why we decided to go into detail and produce the Nummo Robo-Advisor ranking. What we saw about June, July 2018 is that the markets could have their first down year after a period of constant market growth. And this has to do with the tensions between US, China, some nervousness in the market and so forth. And the biggest criticism that robo-advisors had to face was, well, you guys just do passive investments, and once the market tank, you're all going to disappear. And we took this as the hook to really understand, okay, how are they going to do in a down market? And our report is really the first independent ranking on robo-advisors, comparing not only performance and costs, but what you said before, also what we call qualitative aspects. So I think it's very important to look at past performance, just in terms of, okay, how do those robos really invest and apply their investment intelligence, and at the same time costs. Now, cost is hugely important. It should not be underestimated, and there's big differences within the robos. Now, in Europe, the robo space is much more expensive than in the US. In the US, it's much cheaper. And I think what you need to consider is, okay, what is the value that I'm getting for the price that I have to pay, right? And there is all the qualitative elements playing into it. And there you have elements such as tax loss harvesting. I'm talking about the US. You have automatic rebalancing, something that in Europe is not often a standard service, but in the US it is becoming a standard service. Auto deposits. So you have a bunch of qualitative services which are relevant and are price drivers. One important one is access to a human advisor, which you need to consider. There are some people who need a human advisor just to bounce ideas, or there has to be a hand-holding almost in their investments. But this was one of the key elements that we wanted to show: the quantitative aspects, the performance, the costs, and the qualitative aspects. And you see big differences in the ranking.
Right. It was a pleasure. Thank you very much.
Thank you.